everybody. Welcome back to another exciting episode of The Rational Investor. This is Julian reporting in from Japan, where I do these at 2 a.m. Because the Japan's time schedule is so different from the US. So this is probably going to be a pretty quick show today because I have to climb up a mountain tomorrow. I'm doing what's called backcountry, like skiing / snowboarding. Just for my last day here. Tomorrow's my last day, and then I'm going to fly back to Bangkok, and we'll get back to our normal schedule. I'll have my camera, everything like that, and we'll do much longer shows. Just because I'll be back in my normal routine. So just to let you know, today's going to be a quick show. Anyway, first thing, always go through the dashboard, and this is the S&P. We can see down here. I'm going to go to the. Actually, I'm going to click here, and we're going to go here to see a bigger view of what's going on with the S&P. So right now we had this big negative all the way down to December 19th, and then we reversed. And now it's December 30th. I'm not sure why it hasn't updated. I think we do have an issue going on with the breath currently. Let me go back to the overview. So still, here, let me go to the breath here. I think we did have a data issue, and we are talking to the provider about what's going on with that data issue. I see everything kind of has stopped updating as of December 30th. I thought the issue was originally only with, so see TSX did update to January 4th. Look at this huge push up. This too, stock 600, huge push up on the breath. So the ones that are updating have had huge push ups. But if we go to the actual market, so I load this chart, this is the S&P 500. What we can see is that the market is not actually pushing up. It's just kind of sitting in this range. Like here's your big push up since the end of December. And you're just ranging here. Now, to me, this is a fourth wave. So if I go to a 12-hour chart, you guys know I talk about EWT. So this is pretty much, here was your first wave, second wave should be like this. I'm not counting this big spike. This was just a huge liquidity stop run. This is your third wave dump, and then your fourth wave. Fourth waves are meant to basically take your money. I think they're the worst waves to trade. You can see this is our previous wave series. Here's wave 1, wave 2, wave 3. Wave 4 lasted the longest period of time, all the way to essentially from November 10th, 11th to, well, okay, we can actually say the completion was here, but most of the money was made in that one day on November 10th, right? This big spike. And then it did complete on the 15th. But you can see for the rest of the month, the market did nothing but range. This is just take your money range. And then we got the completion with our fifth wave all the way on the upside to 4,100. And again, it happened in basically one day. And then the moves to the downside, you can see we had our wave 1, which happened in 4 or 5 days. Wave 2 reversal that happened in about a week and a half. And then we have our big wave 3, which happened in one. Let me change this. Actually, this is a daily chart, so keep in mind each of these are 12 hours. I do prefer a 12-hour. It gives me a little bit more information. So this happened in basically 2.5 days. And since then, since December 19th, our little bottom, you have not done anything. Almost 3 weeks of nothing, because that is the time to take money from option traders, for example, because traders will pick sides, but the market's only swinging 100 points each way. So the option traders are just losing money. I mean, I bet if we look at the VIX, VIX is probably getting destroyed. They love to destroy the VIX. Just load a current chart. You can see I'm watching that 100. Well, QQQs. Yep, so here, 12-hour. You can see how the VIX is the VIX is surprisingly just ranging right here. It's done nothing the past week. I thought it would have dumped further to the downside here, and it really hasn't. First time I've checked the VIX in a while. We'll go back to that. Let's come back to the S&P. So S&P is in what I consider the fourth wave, and then I'm waiting for this fifth wave, and I believe that we will end up somewhere around here in this 3630 range. This is the midpoint. If I go to a 3-day chart of this downtrending parallel channel, maybe daily is a little bit easier. Sorry, there's so many lines. But this is our fib levels here, which for that range, it's kind of helpful. You can trade the fib levels. I'll go back and show you how on a fourth wave fib levels really help. And then these are all the major levels. And I think we're going to get one of two things. We're going to either get a quick spike right below here, take the liquidity from November 3rd. So that's 36.80. I'm actually going to minimize this and make it bigger to fix the price. So there, right below 36.87. Or we're going to head all the way down and take out the liquidity right here and hit the midpoint of this parallel channel at 36.28. Those are the two I'm looking at. I'm not in any trades right now simply because, like I said, I'm in Japan, and I didn't know when this fourth wave was going to end. They're very hard to predict. I made a good amount of money on this dump from 44,000 all the way down to 3,700, 3,800 area. So I've just been letting the market range here, waiting. I check sometimes, but I'm not watching it as closely as I normally do. So I don't want to be in a trade and worrying about the market or thinking about the market when I'm focusing on, not dying on the side of a mountain, something like that. So this is kind of what I'm expecting for the S&P. Let's look at RSI really quick and see what RSI is telling us. So yeah, if you see here, so here was our original breakdown, right? This was your nice short opportunity. This was great right here. Now, since then, we've got this pattern. This is your downtrend. They try to do a quick fake out here, but we've now reversed to the downside. And if we close down here, this is quite bearish, and we should get our little dump. We go to a 4-hour. You can see how the 4-hour, get rid of this, kind of being held up right here. Like that, right? There's your 4-hour being held up. RSI. We really need to get a push below this to confirm everything. Not even much divergence here. You can see price is following RSI. I want to see a better confirmation, bigger divergence to really feel confident in this dump happening and get in a short. But for now, if I was trading this, I would trade this range. And remember I talked about how when you're in a fourth wave, it's helpful to trade the range. Here's your range, right? And you can trade. So if you were back here and this was the bottom and the top, and then this came up and this came up, once you see 1, 2, 3 like that, you can kind of adjust your fibs, and you could go like this, or you can go here, and you can trade the range. So if this was your bottom and your reversal, you would look for 61.8, 78.6, and 88.6. Generally, I find that, let me get my controls back a little bit. 78.6 area and 88.6 area are great short opportunities. So you could set shorts there and set your stop above the high. So that would have gotten you into a nice short, and you could have reversed your fibs. Reverse our fibs. We can take profit on the other side. And you can see how we came into that 78.6, 88.6 area. Again, you would have taken profits up after it passed 78.6, maybe at 88.6 at the very next take profit and put your stop at 61.8. Once you pass through that 61.8 area, that's one way to trade it. And you can always tighten the fib range as you get to the next one. Let's say you completed that trade. Now you want to get to your next level, and maybe you went into a long here. You could have exited and went into longs, and then again, where did we go to? We went to the 78.6 and the 88.6 area. You would have gotten filled and exited your trade here, and then entered shorts. And that's only in this. It's only in this fourth wave that it's really helpful to do this. Eventually, it does stop working, and you may miss the major move. But while it's happening, it's very profitable. You can see again after we touched this, we came down 88.6, 78.6, 61.8. You would have again exited, made nice profit. And then we could shorten again, go here. And where do you end up on the other side? Look, 88.6, 78.6. Right in this area again, you would have been filled. So then you could short and go right here like this. And where are we? Right, we're tagging 78.6 and 88.6 right now. So this would basically be your time when you're considering now a move back again to the upside. So then the move to the upside would be, what would we do? We could tighten our range right here, like this, and we'd say this is our low, and this is our long point, and we would look for trades to here, this area. So hopefully that helps explain how to kind of trade a fourth wave. I would just use fib levels and stop at the lows. And normally this is kind of what happens. And what we're getting right here is a bit of a triangle formation, right? If you look at this straight across, though, you could also say that this is, I wish I could say that this is a bear flag, but it really doesn't look like a bear flag. A bear flag would be more like, if you're going to look on the left side here, like this, right? But we're not really getting that kind of upward trending picture that I would like to see. I mean, I could kind of model it like that, but then on this side, it's more of a, just a squeezing triangle, which can go either way, but I do believe that more likely it will drop to the downside. And you could even do an ABC, like we could get an extension like this. I will be very surprised if we get this though, but it's potential that we could go down into my green 3,500 zone. So this wave 5 could extend all the way down here. I'll be surprised if we do. I'd rather go with the safer, shorter term target around 3,620 area. But it's just something to keep in mind. It is possible. If we take this entire range and I reverse it, let's see where our 1.618 leads us to. 1.618 is here, 3,500. So again, it is possible that we hit that level. This was such a weird wave 2 pattern here, and it doesn't even count as like a real wave 2. If you're looking, like I look at it on a daily, it kind of can justify it, but here like this, it really isn't a wave 2. Possibly better to count this. This would be the count. So this is one that's throwing me off a little bit, but possibly better to do this kind of count. And if that is the count, which is more conservative, that's our low, this is our high. You could either go from here or here, these two levels. Your 1.618 leads to this 3,600 area, which takes out liquidity here and possibly can even go into this area. So this entire range, I think, is a good area to start taking profit if you are in shorts. So that's what I'm seeing from the market. I do think much more likely for a move to the downside to happen here. I wouldn't get too bullish, wouldn't get too excited. Be cautious. This triangle will likely break. I think until it does, you just play the range like I showed you using the fibs. So right now you should be taking profits. If we get a bounce to the upside, you can essentially get in a short up here in this area. You know, set your stops. If you want to be extra, you want to have a lower chance of getting stopped out, you set your stop here. They could, you know, do something like this, do one more spike above like that, and then dump. That's also a very real possibility up to this 3,800, 3,900 area. So be careful about that. You might want to set your stop even up here. Let's see what your profit would be if you got in a short here and you set your stop above 39.10 and you went all the way down to my midpoint target. Still a risk reward of 5 is a good trade. I think it's a really good trade. However, if you took the trade down here, you know, and you set your stop all the way up here, and you went to 3,600, boom, you're only at a 1.53 risk reward. That's why I'm not a big fan of getting in the short here. I want to see a rebound, and I can consider it. I'm actually going to set alert. We'll see. Maybe they'll give me until next week before this drop happens. The market is dumping a bit right now because, and I know I missed going over econs. That's supposed to be the next thing, and I missed it. But let me go back to here and let's look at Forex. So what happened that caused the market to drop? You had, so we do have FOMC meeting minutes happening in an hour and a half, right? So is this still in Bangkok time? I think it's still in Bangkok time. Sorry, I'm all messed up because of time zones. So you had, no, that happened yesterday. I'm sorry. So that already happened, and that caused the gyration, right? I go here, 1 hour. So this gyration here was FOMC meeting minutes right there. All right, let me this one, these big spikes. But what caused this dump is, go back, this non-farm employment change. So you can see up here it says forecast actual, and forecast was 150. But what it came in was it came in as 235,000, much higher than expected. So what is non-farm employment change, and why does this matter? So non-farm employment measures is an estimated change in the number of employed people during the previous month, excluding farming industry and government. And the reason the market is dropping because of this is they take this as the economy is doing well, which means that the Fed can keep raising interest rates. I believe that's why the market is dumping, because they're like, oh, okay, darn, interest rates will keep going up and liquidity is going to keep being pulled out of the market. So the market is disappointed with the fact the economy is doing well. They'd rather see employment dumping and that the Fed has to start lowering interest rates rather than raising interest rates to stimulate. So hopefully that helps explain why we're seeing what we're seeing right here in the past, in the past hour. 1, 2, 3 hours ago. So 3 and 4 hours ago. And you can see it's bouncing because we get my fib levels right. So it makes sense with bouncing a bit. Anyway, if we get back up here, 38.650, 38.60, 38.70 area, those are nice areas to add shorts. You can even add a bit up here. I'm thinking it would make sense to spike. Often the market does a big spike above everything before it dumps. So something like this, like that, and then a dump would make the most sense to me. You can enter all the way up to 3,900. Say your stop up here at 39, 10 to 20, 30 area. I think it could be a great trade. So that's the S&P. Everything else kind of follows the S&P. Let's look at the VIX to see if it's confirming what I'm basically seeing. So we should be seeing the VIX looking bullish here. Let's see here. Okay, so here was your original breakout of this downtrend on the VIX. We came down, we touched the underside or the overside of my downtrend line. And now we are heading higher and we're pushing through my blue VIP level and it's looking very bullish. The VIX looks like it really wants to break out here. And you can see we're in this channel, parallel channel on the VIX for an extremely long time, for the past year. And it looks like it's forming essentially a W right here. This. I mean, if we get confirmation of this W, we could push all the way up here to this midpoint, come back down and push higher. What does chaos tell us about this W right here? Chaos is saying push all the way to 44. I think that's a bit aggressive. We can pull it back. If I pull it back and I ignore these two outliers and focus on just the high versus the low, this kind of range, I found that often focusing on the range can work better for chaos levels. We go right up to this 39 area in March 2023. I mean, anywhere really. We can even move over here, even in February. Anywhere from January to February, end of January, beginning of February, all the way into March would be an area that's right at the top of my parallel channel and would make sense for us to hit. So I think that would coincide with the S&P initially. If that occurs, that would coincide with the S&P initially hitting this 3,600 level, and then finally dumping further into these lower zones I have. I want to actually extend this here into this 3,600, slight bounce, and then moving into my 3,400 before finally reaching the final target of this entire little bear market in the 33 to 3,100 range. And that's the end of my 5-wave large series. If we go here and I show you this is my downward parallel channel for this bear market. Here are the waves. Here's wave 1, 2, 3, 4, rebound. This entire 4th series is quite confusing in this whole area, right? So this is your take your money time. It's been going on for about 6 months. Worst period to trade. This period was great from March to June. Period of January to March was also not bad, but this 4th area has been extremely difficult to trade. Anyway, to complete the 5th wave, I want to see us in this zone, 3,500 to 3,200 area, right down here. preferably down here to take out these lows. All this liquidity down here below. This was quite the range in this area back in 2020. A lot of liquidity in this area. I want to see the market take out these liquidity lows, and then I can consider getting into some nice longs. You see, I have this marked as an M. This is a big monthly liquidity point. This is the weekly liquidity point right here. Those are your two major zones. Okay, I keep going back to the S&P and spending a lot of time on it, but I think it's extremely important. If you can get the S&P direction right, I think you can get most things correct. Speaking of other, kind of indicators giving us clues in other markets, the DXY is also finally bouncing from my bottom area. This was the accumulation zone. They took their time accumulating from mid-December until now, and we're finally forming this W and bouncing. You can see we've completed my 5-wave series. Where does, I'm going to get rid of, well, first we have our fibs, right? All the way from the top. Let's go all the way to the top here. That's your fib top, and then your fib bottom is down here. And let's reverse it. Okay, so then targets for US dollar would be in this range, 61.8 to 88.6. And let's also see, I'm going to get rid of that fib. I'm going to switch it to chaos and see where chaos puts us. That, I'll just look at the range. Okay, chaos puts us at 110. It's 110 area, which makes sense to me, especially with the time frame and stuff. Where does that hit with this midpoint, the end of January? So it would make sense to me that we spike a little bit further here, get rejected, spend a little bit of time here, push higher, hit 2.618, spend a little bit of time here, and then range in this area before we finally hit the 4.619. And it would be something, it would also be a Elliott wave pattern. And I think we'll hit it a bit sooner than I drew over here in March. I think we'll hit it back here in February to hit this uptrending parallel channel. But I think we'll get, let me show my Elliott wave series. We'll get this is your wave 1, pull back, wave 2 into this area, a wave 3 push all the way up to above 108, pull back and range in this zone for a while before we finally get my push higher and the 5th wave, kind of like that. Wave 3 probably could go up to here. Wave 4, pull back to here, and wave 5, more like that. That's kind of what I'm thinking for this range. We could even do a little bit of a parallel channel. Again, this is very early analysis, but it all kind of lines up with my current theory and what I'm seeing with the market here. Adjust a little bit. And this, I think, is a little bit too not wide enough, in my opinion, this channel. I think it's too, let me see if I can go to a 4-hour. Look at this spike in the dollar. Holy crap, huge spike. And by the way, if you look back, you can see it says actual greater than forecast is good for currency. So what happened to the US dollar? It spiked. Not a surprise. Let's go here. Let's pull this back a bit. Okay. And again, this is a very early parallel channel, but this could be our parallel channel on the way up for our stairway. So 1 there, right? 2 here. I think, again, let me adjust a little bit. Let's adjust a little bit more. Try to get this as accurate as possible. But by next week, we're going to have to adjust it. This is a multi-week move. Makes sense. That's about the widest I can get. So then if that's the case, you can see we pull back to 2 here, go up to 3 here in this area. 4 pulls back. We might even spike below. And then 5 is here like that. That's kind of your level. But I do think this is not wide enough. And I'm gonna look for a bit of a wider channel here. See, look at this. that. I think that as a channel makes more sense. This is your upside here, downside, maybe even down to these levels. And 3 is here, 4 down to this area, and 5 all the way up here in the end of March or mid-March. Yeah, I think that this makes a lot more sense. Hopefully that makes sense to you guys when you're looking at it. I don't think it's perfect, and we will have to probably adjust after wave 2 completes. I can get a much more accurate picture of what wave 3 will be. Okay, so that's DXY. Make sure I save this. I spent a lot of time drawing it. I want to save it. I don't want to lose that information. Okay, let's look at some stocks. So certain stocks are really breaking out. I'm going to come back to Boeing. I'm going to save this quickly, but I want to come back to Boeing and talk about it compared to some others. So Tesla, you can see, has just been dumping very hard. It looks absolutely terrible on a 2-week chart. We blew through and hit all of my targets I talked about weeks ago. But you can see on these higher time frames over here on my chart on the right, we are getting really oversold. Very, very, very oversold. And on a weekly, we're coming in to this 7 level, and I've got some divergence indicators setting off. I go to a 3-day daily. Okay, so there's your daily chart. This is kind of your downtrend right here. You can see on the daily, we got a fake out with this RSI spike, and that does happen, but you had a 7-8 and my downtrending channel that were warning me that, look, this is kind of a fake out here. So now we're at the bottom of my parallel channel, absolute bottom, a little bit below it. I can't even go lower. And it looks like we're putting in a little bit of a W here, but we could honestly break lower. As long as daily is this negative, we could go lower than my original parallel channel. And I'm kind of wondering how I could I have drawn this a bit more vertically such that we are still within this channel. And the only way I can see it working is like that. If I went like this, then we are right at the bottom of the parallel channel, right like this. Oops. And you see, we tagged the bottom of the parallel channel and bounced. This is the last area where we're still within that channel, just barely. The question is, can we go much lower? We took out these liquidity lows right here. So you can see this was a big liquidity zone back from August to November 2020. We took that out. There is a small gap right here at 76. Question is, can we fill that gap? And I think if the market drops further, we definitely can. Although I think the short opportunity for Tesla is basically over. I think you missed the boat. But if we check Fibs, let's look at our Fibs. What do our Fibs tell us? All the way to the lows back in 2019. Fibs tell us that taking this level. You can see how 50% works as a big resistance, and then 61.8 we also bounced from. I think the parallel channel kind of stopped this, but we should have hit this 78.6 level. I'm very surprised we didn't. I guess some people front ran a little bit, especially since it's around a BFRN, what Brian likes to call BFRN, $100 BFRN. But the last obvious target. So where do I talk about on the wave 4 range, where you accumulate kind of this 88.6 area, and we're starting to enter that area. So I think anything in this zone would be a nice area to start considering accumulating Tesla. But I do think we have further downside, but I don't have any short opportunities, so I would just be careful. Let's look at Apple. Apple is also in this kind of a downtrending parallel channel to a degree. And if I extend it out, right, I just a little bit like that, right like that, yeah. See, we're again at the low end of this parallel channel. I can go to a 3-day, and we've got 7-8 coming in on the 3-day along with a CD8, and oh wow, and a CD9 here. These are all divergence indicators. I'm very surprised to see weekly divergence indicator. 2 week, nothing on the 2 week, but I'm very surprised to see this. And then also a 3-day, 7-8, and a divergence indicator. See, last time on a 3-day, we got a divergence indicator. The price bounced massively. Okay, let me see what RSI is telling me. RSI did break to the downside, but potentially putting in a little bit of a W here. What does our 4-hour say? So still in a downtrend on this 4-hour. Everything is red. I can't get bullish on this, but because of the huge resistance of this downtrending parallel channel, I have trouble getting too bearish, although we did break the lows. Right, it's very interesting that S&P is where it's at, but Apple actually broke the lows, previous lows. So if I go here and kind of make this a bit bigger for you guys, here was our previous low, and we came down and decisively broke the lows, and we're sitting down here. So if you get a lower low, oftentimes price will make even a lower low before it finally starts basing. So I'm a little bit concerned about the area that we're in at the moment, and it's possible that we could, I don't know why they wouldn't take out all this liquidity down here and come down to this 115 area, but it would have to break this channel, which Apple has been respecting pretty well. You can see how this midpoint acts as a large resistance area. So I want to come down a little bit here, and you can see the rejection from this midpoint level. And we've got these CDs on the 3-day and the weekly. So Apple's a tough one, and it's kind of throwing my entire analysis in a bind, because I think Apple is a huge part of the major indexes in the US. So this is this definitely, some of these lines, I don't even know why they're here. And let's see something really quick. Let's look at a couple of channels we have. This is one, right, all the way here. We could do it this way or this way. I prefer like this. That's one uptrending channel that could provide resistance. The 105 area. It is a BFRN, so this $100 area is going to be a big one. Let's look at fibs. Go all the way back to the lows back here in 2016, where Apple really sat down here for quite a while. You can see 50% is at 100, and 61.8 is at 83, and our accumulation zone is all the way down here. 56 and 40 would be our accumulation zone for Apple. I think 50% makes sense as a target, as long as we're pointing into this negative direction. However, again, going back, we do have this 7, 8, and 9 printing. Last time I printed, price paused, bounced, price paused, bounced. This here, price bounced. Almost every time price pauses and then bounces. So this could be, there could be a bounce coming here before the final move lower. But at the same time, we've got a major breakdown on RSI here for me. Very conflicting area. I don't have any clear trades on Apple or Tesla. I'm a little bit concerned about this, and it puts my other analysis here on the S&P in question a little bit, and that's why I do suggest caution here, because of what I'm seeing from things like Apple and Tesla. I'm trying to think if I should look at something else. I mean, if I show you Boeing is a very interesting example of something that is not following the trend at all. Boeing is not really I wouldn't call Boeing a growth stock. I would call it more of a value stock. Someone correct me if I'm wrong, but but it is in the defense sector. I think that changes things a bit. You can see how it had this major breakout, and this is a weekly chart. And chaos points to $358. So Boeing already went from, it was at 120, and now it's at 200, up nearly 100%. And if we look at this weekly RSI, it just pushed through this very hard. I'm kind of disappointed I missed this big move, And I talked about many times I was looking for a pullback and just didn't get any kind of pullback at all. It just keeps pushing higher. Everything is green. It could easily keep pushing higher into these. Here's your 50%, 38.2. Here's your levels where you would start selling. Basically up here, I could easily see it push up to 350, 275, then 350. You know, take out liquidity here. But unfortunately, again, kind of late. I kept thinking that he's going to pull back at some point, and it just didn't. Just sitting up here. Sorry, one second. Sorry. Oh, excuse me. It is getting a CD6, so there is a divergence forming. Not a great area to long. Again, I want to see a pullback all the way down to here, this 150 area. Then maybe I can consider it long. But Boeing really bucking the trend, the downtrend, and ignoring everything else that's going on. I just wanted to share a couple conflicting things that I'm seeing. So as you can see, Tesla and Apple look like they're almost bottoming, and Boeing is pushing higher in a very strong bullish trend, while the S&P is looking bearish, and the VIX is also looking bullish, and US dollar looking bullish, which is bearish for everything, all risk assets. So conflicting signals all over the place. Breath is giving us a positive buy signal from back in December. It basically triggered a buy, so that would have been back here. You would have triggered a buy somewhere in this area around 3,800, and it's saying we're heading higher. But my wave series says, okay, we're on a fourth wave, and we have a fifth wave, so the downside still to complete. So again, and I know I keep saying this, conflicting signals. Why don't we look at some other assets like oil? Oil, I drew this parallel channel on this 3-day chart, and we were stuck in this basically a 2 range here forever. And I'm looking to see this 3 drop to the downside before that we get a 4 rebound here, and then a 5th final drop to my final target in the 46 area. If I go to a 3-day chart, we can see that if I adjust it a little bit, we're kind of just sitting down here, and everything's a bit negative, especially on these higher time frames like a weekly. We're not looking particularly amazing. We're just sitting down here below my VIP line. And if I go back like this, and daily, this is kind of what I'm looking at. And you can see we did break down 12-hour, nice breakdown rejection happening here. We're kind of just ranging again like the rest of the market. But eventually this second wave, I'm looking for it to break to the downside. You can see we had an M that came in here and did break down. If I do chaos off that M, it does take me to $60 area. So maybe on our 3, we only go to here, but I am targeting to the bottom of this parallel channel. It might be a little bit too aggressive. Somewhere in this range makes sense, I believe, for the bottom of oil before we get a bounce, and then a longer range, probably a sharp move lower at some point, and then a range here for wave 4, kind of what the S&P is doing, and then your final spike lower for wave 5 to complete the oil move, and then we'll start an accumulation range before then we reverse back to the upside. Okay, that's oil. And if oil spikes lower, then I think S&P should also follow and head a bit lower with DXY rallying. Okay, so that's oil. What else I want to talk about? Gold. Gold really took off. That's another one that didn't pull back like I expected. IDC is the one we usually look at and do analysis on. Let me see here. Yeah, so here's your big uptrend in gold. Same as Boeing. I'm waiting for this to just dump to the downside, and it's just not doing it. I've been waiting for a pullback right here. This is, if you miss this move, this was the area I was waiting for a pullback, and obviously they're not giving anyone this pullback. They did it on purpose. You had literally 1 day to get in, and if you didn't get in on that 1 day, you missed the majority of the move. You could have entered here at 1730 and you would have gotten up to 1830, but you still missed this big 100-point push higher. So I want to see a breakdown in gold and pullback, come down all the way down to here, or even just these levels. and I can start considering certain long opportunities. That could coincide with a spike in the dollar. We can go on a 3-day and go here, and this could be our pullback to this area and then a bounce. You can see a 9 came in on the 3-day. That's a big reversal signal. So you have to be careful with gold here. I want to see as I said, a reversal signal. We can do also our fibs, and this would be our buy area according to fibs right here. Right, so 17 to 1640. I'm gonna set. I actually have an alert for 1713 already. When my price crosses that, I can consider some buys. I'm actually gonna do another one right here at around this 50 EMA. Yeah, this is what I want right there. Okay, so looking for pullbacks in gold, which would coincide with the spike in the dollar. I wouldn't long here. I think it'd be very, very risky. You're kind of in no man's land at this point. It just came back up to these liquidity zones, and now it's kind of considering pulling back again. Okay, so that's gold. What else do I want to talk about? Anything with currencies other than the dollar? I mean, I know there's a lot of people interested in the euro, so why don't we take a quick look at the euro? Yep. Okay, so euro kind of doing what I originally predicted. So first, here's our one trade we had where I said take a long here. You had a 3-to-1 risk reward ratio. Stop at these levels. You already hit our profit target. So profit target was hit. Okay, awesome. This was your uptrending kind of. Let me go here. Yep. So here's your uptrending little like wedge, and wedges often break to the downside. And there was your break. Get rid of that wedge now. And now we're getting our pullback, and we're tagging this VIP level. I don't think we're going to break through so easily. We might get a little bit of a push higher, and then we roll over. So the question is, where do we ultimately end up? Well, again, if we look at our fibs, I think this area makes sense. Right there. Maybe even a push below 96 to just take out the liquidity, even possibly 95. Just boom, and then we head back up. Something like that would make a lot of sense to me. Weekly chart, weekly looked so bullish, but now we're pulling back. 3-day hit 7-8, weekly hit a 9, daily hit is 7 and 8. I think everything is overdue for a pullback. So that would make sense for euro, but I can't get too confident until I see us dump below this major. You can see how this 50 EMA worked very well on the downside, constantly rejected all of last year. Now it's acting as support. I want to see it push through that before I can get too bearish. You can see the weekly is still holding onto a bullish area here. We need to see that turn bearish before we can really, really start jumping into bearish trades on euro and expecting it to head much lower. So that's the euro. That's it for kind of like all the legacy market. Why don't we look at crypto? I know a lot of people are very interested in crypto here. The weekly chart, so here's my wave pattern, and you see how we just kind of been sitting in this 4th wave, and my final 5th wave objective is down here at $500 billion. And that is the case until this weekly breaks out. This weekly downtrend on our side. Let me make this a little bit bigger. So we're just sitting down here. I want to see us out of this red zone before I can get sufficiently bullish on crypto. I'm not accumulating anything until I see us push on the other side of this, and then I can start dollar cost averaging. But until then, unless we get that final spike lower to my 5th target, I can't get too bullish. I think I'll get washed out. And these are my 2 accumulation zones right here, 500 billion and also 300 billion, because these are major liquidity areas, especially if I go to something like a 3-day chart. See this big liquidity area here and big liquidity area here. I also had some resistance areas here. I'm going to delete these actually. It's distracting. So that's kind of the, let me see, go to a JLE. Yeah, so here's your downtrend. We did break out on the other side, but do you see how we've got a 50 on the daily, but a 36 on the weekly? But on the 60-minute, or on the 4-hour and the 12-hour, we have positive signals, but then negative on the lower time frames. This is the worst kind of, if you're kind of a trader with my type of strategy, this is the worst thing to see. You don't want to see this because there's conflicting signals all over the place. You want to see everything lining up. This tells me this is not a good area to trade. I want to see the 4-hour and the 12-hour also go negative, and then I can consider jumping into shorts. But for now, it's kind of in a no man's zone, and we're just oscillating down here since the beginning of November with my ABCD target, right? So this was drawn from here to here. My ABCD target leads me right to 560 area. So what kind of drop is that from where we are right now? Short position. So you could just take a short in this area, say your stop even all the way up here, and you still get a 3-to-1 risk reward. But this is a 27% drop from where we are right now. Huge drop in crypto. But this is kind of what I'm eyeing. And on a 4-hour, sorry, you can see we are crossing a bit lower, but nothing that is enough to get me to jump into some crazy shorts just yet. I want to see a little bit more confirmation on the daily. We do have like this. We do have this. This is often a good consideration for a short, and we did spike above all of these levels. So we took out all the liquidity up here. This is a nice short location, actually. Maybe this is a good short. If you can get into a short in this area, you set your stop above these highs right there, and you target this dump to the downside and make this area a bit bigger. This dump all the way down here, where my target is, right? All the way down here. 15-to-1 risk reward ratio. It's actually a really good trade. Yeah, I think I might consider taking this short. I think it's actually a really good trade. If we breach the highs, not a big deal. It's 15-to-1 risk reward. You can always set another one a little bit higher up until we get to this big resistance area. You can see how the 50 EMA acted as huge resistance multiple times going back. Resistance, resistance, resistance. Occasionally it spikes above, but it always comes back under. This one area was a big. These two areas were tricks, but otherwise it did respect the 50 EMA and my channel here heading to the downside. Okay, so that's what I'm seeing with the total crypto market, and you can apply that to any coins, but maybe we'll just take a quick look at Bitcoin. Look at Bitcoin and see where, does this kind of line up? Again, I have my, ABCD here, and this is our long extended kind of bear flag, I would say. See how this looks a lot more like a bear flag than what I saw with what I'm seeing with S&P. So just a very long extended bear flag since November. Just get traders really bored with crypto and maybe accumulating here, thinking we're going to bounce, and then just rug pull them all one last time. Just destroy any remaining survivors, anyone that wasn't killed by Luna, Terra disaster, FTX disaster, Bitcoin just crashing to the ground. So anywhere remaining stragglers that survived all the other challenges, let's just take them out one more time. I think it really would make sense to do so. But at the same time, so many people are expecting this. It's a little bit, that is my one concern with this whole area. I feel like there's too many traders talking about it that I know. So let's see here. Yeah, you see this spike right here? We took out most of the liquidity, everything except for this one spike. But all the way back to December 20th, we took out everything for the past couple of weeks. And oftentimes Bitcoin does that before making a major move in the opposite direction. So if you short here, this area, and you set your stop right above these highs right there, and you target this big downside target all the way down here, right there, right at the top of my DCA zone. Let's not be too greedy. Let's go to 13. 1,000. Oftentimes people like to front run. You see my fifth wave completion too. Let's just say 13,000 area, assuming some front running. You get a whooping 16.8 to 1 risk reward ratio. Holy crap. That's crazy. And you jump on a 22% decline in Bitcoin. Not a bad trade. I think it's a great short, something that you consider, especially once we break on this bull flag. If we can break to the downside here, nice confirmation and then rejection, you could get in there, but your risk reward is not as good. Let's say you get in there instead of now, then your risk reward drops to, but you probably have a higher chance of the trade working out. Again, 1,300. Your risk reward drops to 7.7 instead of 16.8. So something to just keep in mind. You get a higher risk reward, but higher chance of it also not working out if you take it now versus once we break this, uptrending kind of bull flag, or sorry, bear flag. And that's Bitcoin. Let's look at Ethereum quick, and then I think I'll call it a night. Pretty tired, as I said. It's 2 a.m. here. Actually, what time is it now? 3 a.m. now, and I am hiking up a massive mountain right now, or tomorrow. Not right now. Yeah, right now I'm on the mountain doing the daily brief. No, I'm in a house, and tomorrow at 7 a.m. I have to. Well, today it's 3 a.m. So in 4 hours I have to wake up to prepare to hike this mountain and then snowboard down. I will try to get some cool videos and show you guys next week once I'm back in Bangkok. Target for Ethereum is right below the previous lows in this 800 area, and then DCA in this whole 600 to 800 area. I think that makes a lot of sense. And again, you could short right here. Say your stop above the highs and put your target conservatively right in this like 850 area, but it's only a 3.4 to 1 risk reward ratio. Not nearly as good as Bitcoin. Not nearly as good at all. You could drop and go all the way to the highs just right there, and then you get your much better risk reward. If I go to a 4-hour chart, do something like this, and you just set it right there, and then you get your like crazy 12.5 to 1. I think Bitcoin is a much better risk reward ratio trade. I think I'd prefer to take the Bitcoin trade, although on Ethereum you do get a larger decline, 31% versus 23% on Bitcoin. However, with Bitcoin, instead of, you can do a 2x leverage short instead of a 1x with, say, Ethereum. Let's check the dashboard and look at what it's saying about crypto. I'm not even sure if it's updated for that. Hopefully it did. Crypto top 30. Yeah, so very bullish for now, but it looks like it's starting to turn. We are on the high side at the moment. When you get above 80, that's when things kind of start to peter out. I want to see this slow catch up and then cross, and then we can consider a short. Last time it triggered a short was December 4th. And what happened back then? December 3rd, December 4th. December 3rd right here. So we triggered this short here, and we sat there until eventually dumping by December 16th. What did the breath do? So December 19th it bottomed. So you could have gotten into a short on the 5th, 6th, and bottomed and exited on the 20th. What would you have seen? So December 5th, something like this, you would have been early, and this is their spike higher to take anyone out, but you would have exited right here on December 20th. So you would have made a nice little profit. Something like, you short in this area, December 5th. Short. Yep, short. Okay. December 5th. No, and you would have gotten out somewhere a bit up here. So you would have made a little bit, 6% return. You would have exited right there, entered here, exited there, not bad. Sometimes I do think the breath is a little bit lagging, and that's why I try to give these earlier signals if you really want the ultimate like short area, and then where to long down here. But the breath works well as a tool to say like, okay, well, there is there is potential that everything is bullish for a while, and it could sit in a range. I think if you have an overall bearish trend, but the breath is giving bullish signals, oftentimes price will do nothing. It will just range, which is kind of what happened here. And then once your bear signal is triggered, then you can get a dump, and you can see that that's kind of what happened here. You got more of a dump than anything, but still a range. But I think when the next one triggers, you could get quite a big dump to follow everything else that I'm talking about in the market. The only thing putting a bit of a wrench in my entire theory are the Tesla and Apple charts. They're pretty oversold, in my opinion, and I don't think there's a huge amount of room to the downside. So I'd be cautious with those, but we kind of need to see pullbacks in those to see pullbacks in the rest of the major indexes. I think it's a tough area. I would not go too crazy with size until we get a little bit more confirmation. But I think I detailed some good trades today. If you maybe go back and watch the YouTube recording after this just to look at some of them, and then check yourself on your own charts to make your own conclusions. And we will see what happens going into next week. I will, as I said, be back in Bangkok. I'll have my camera on, can interact with you guys a lot more. I'll have 2 screens. Right now I just have 1 screen with me. You don't really need to actively trade. You really don't need more than, in my opinion, more than 1, maximum 2 screens. I think it's just kind of crazy. I know some traders that trade from their phone that are successful. I wouldn't recommend it. I know personally, if I trade from my phone, I don't do as well. I need to trade from my laptop, but I don't need more than 1 screen. Okay, anyway, like I said, it's 3 in the morning and I have to climb a mountain tomorrow. So, assuming I survive, which I think I will. It doesn't look too particularly difficult from all the videos I've seen, and I'm going with a bunch of friends. So I don't see it being a problem. I will see you guys next week. As always, I hope you guys have a great weekend. Don't sit in front of the computer too much. The market's not going anywhere, especially crypto on the weekend. Just kind of ignore it. I kind of just turn things off. I don't even really pay attention to it on the weekend. It doesn't do much. Oftentimes it just sits there, or just liquidity hunts a bit. Try to spend time with family, exercise, that kind of stuff. Just take some time to unwind and prepare for the next week. Anyway, as always, hope you guys again have a great, fantastic weekend, and I will talk to you next Thursday or on the site before then. All right, bye everybody. Ended with hitting my laptop.